Nirmal Jain joining us right now.
Yes.
Okay, let's go across. Nirmal, good to have you on the show. How do you react to the market's big comeback? Are you surprised, or were you in the camp that believed that even if there's a knee-jerk reaction, that'd be bought into?
So I think we were always of the opinion that the impact of Greece on India will be very negligible or very small. And I think what would have happened in the market, that people who overestimated the reaction would have gone short, and I mean that is what the recovery on the market is showing. So to my mind, I think India-specific factors will play a lot more in Indian markets. That is corporate earnings and the monsoon and reforms and other things here. Industrial production, core sector growth, and all those numbers will be more relevant. And I think Greece was long discussed, debated, and maybe discounted, and now it appears over-discounted by the market. And impact of Greece, I mean, it accounts only for 2% of GDP in overall Eurozone. So it's unlikely to be very significant. But one needs to wait and see how the larger nations of Europe now react, whether they want to let Greece continue and give them some lenient terms and some way to survive and continue, or there's a forced exit, and what is the time frame for that? That I think we don't know at this point in time, but it looks like that more or less these factors are discounted in.
Nirmal, good afternoon. Neeraj here. Am I understanding you correctly? Are you saying that even if there is no consensus between the EU countries and Greece, the markets will at best give a dip, which will get bought into? Markets?
So I think, at best market will give a short-term dip, but I don't think it will have any medium to long-term impact on the market.
Okay.
In a way, if Greece, say there's no consensus and Greece has to get out of Euro, again, there are many people, there are many economists of the view that it may be a good thing from a medium to long-term perspective, because it can have its own currency which can depreciate, which can devalue, which makes its exports and manufacturing more competitive. And in a way, very indirectly, it reduces the burden of the social security and pension and other things, because it will be a devalued currency. But it's a more, without getting into those details, I think more or less market is now prepared for both the possibilities, and these factors have been taken into account. Nonetheless, whenever the event happens, there can be some knee-jerk reaction, some temporary dip. But I would not like to believe that it will have something which is a trend reversal kind of an impact, or something which is a long-lasting impact.
Okay, so that pretty much settles the argument as far as the impact of global cues, especially the Greece issue on India goes. The China worry, is that more China-centric as well? So, we stay insulated?
Now, China worry is maybe I think it may be a good thing for India from a different perspective. So what had happened is that China market had there was a kind of a bubble formation there, and it shot up very quickly. Now what happens when China melts down, India and China compete for a lot of FII money in different pockets. Then India becomes by default more attractive destination for investment among larger economies. So there aren't too many emerging markets that can absorb kind of capital that China can, followed by India. So I think China is something the stock market had bubbled there, which is correcting, and maybe that should drive investors back to India.
What about, you want to take a question?
No, please.
Okay. What about, Neeraj was just highlighting that, yes, we are back. The uptrend has resumed, so we are at 8,500. Good comeback, really, for the market from the June lows, in excess of 6% at that. But the key headwind is really with earnings. And what do you expect that to do in terms of directing course for the market?
So that is a big worry. I don't think earnings season will be very positive. I doubt whether that most of the corporates or banks will be able to announce a positive surprise. So I would say that from investors' point of view, one should wait and watch how earnings pan out, and not rush into buying at this point in time. Because, I mean, it's a big worry, and one should be careful about it.
Nirmal, so Final question, at least from mine. I'm sure Tanveer probably has a couple of others as well, but I don't want to overstay our appointment with you. Where do you believe the earnings strength could come in? Because there is also a possibility that we may have wherein that the reforms process that as we foresee, it may not actually go as per strength in the monsoon session because of the political rumblings. So that support is out. Where will the earnings strength come in to support the market?
No, so that's why I'm saying earnings strength or weakness that we need to see when the earnings start coming out. But the IT sector has been one sector that people have been watching, and last quarter it was a bit of a disappointment. So that is one. Pharma is supposed to be doing well, but is there a recovery in capital goods and industrial sector? Cement prices have not been too good, and offtake has been poor. So I think most of the analysts, at least our analysts, are not expecting a great earnings season for cement companies. So I think one has to look out for consumer sector, which is both discretionary and non-discretionary, and see how earnings season there is. Combined impact of demand and also the commodity prices have been softer. But, more or less, I think most analysts have the view that earnings season may not be that great. To some extent, it might have been discounted in the market, and to some extent, one has to wait and watch.
Nirmal, before we let you go...
Banks will be the key thing because...
Sure.
Particularly PSU banks, because that's something like dark horse and we really can't predict, and even private sector banks for that matter. So I think the most significant impact may come from banks' earnings.
Since you mentioned commodities, just wanted to get in a quick word on oil, stepping lower and that fueling the trade for oil marketing companies since last week, actually. Do you think that the trend line on oil is lower, and so perhaps that would just help India's macros, and that also explains part of the recovery and the resilience today?
Yes, oil now has got a new band, so it's not going to go back to the olden days of $150, $120 per barrel kind of thing. But always if oil prices are softer, that's a good news for India. We are one of the largest items on our import bills is oil, and more or less inelastic demand. So I think that will always benefit current account deficit very directly, but also fiscal deficit, because somewhere there's a burden of subsidy or maybe lower tax. Oil coming down is good for our macro, and that'll be positive and that will help recovery faster.
Thanks, Nirmal. Thanks very much for putting all the cues in perspective. Appreciate your time this afternoon. That, in fact, is the journey for oil marketing companies from 8,000 to 8,500. Leading the market, actually. Outperforming the index, that's 11% on BPCL, 15% on HPCL. Mehrabun, you want to come in on this?